Hi everyone, welcome to Tuesday, and like every Tuesday we go and take a look at the performance of the NZX 50 being the main board for the New Zealand Stock Exchange. Just the housekeeping before we do that, and that is just remember that this is for educational purposes only. Definitely not intended to be personalised financial advice. If you're looking for that, you do need to go and have a chat to your own financial advisor. Let's take a look. Right, I'm recording this on Monday afternoon, actually. It's about 2:30, and you can see by this little red candle at the end here, that is for the trading for just Monday so far. So the market is down just under 1% or $132 thereabouts. Thing with last week, we can see we have got like a little inverted hammer there. Just move my cursor away. That means that the sellers were in control. You can see looking at that candle, we've got quite a strong wick and the main body is very, very little, which does indicate that the sellers are in control. So we do need to keep an eye on that because, hey, it could be potentially a reversing pattern. Just keep in mind, anytime when you're looking at candlesticks, and I'll just zoom in, anytime that you're looking at the candlestick charts and you can see that this has got a long wick, so forming out of the top of the body of the candle, just remember that that means the sellers are in control. If it had a tail, if you like, down near the bottom, and I'm just trying to have a look, here's a hammer here, you can see that the tail is a lot longer than the wick. It means that the buyers are in control in that particular example. So that's just something to keep an eye out on. What that means going forward, who knows? I've kept saying to people, I'm not in the game of guessing where tops and bottoms are. I just need to purely look at the charts and see what they're telling me. At the moment, we're still just above that sort of high. We obviously haven't gone above where we closed a week ago, but we're still trading very, very high. We haven't come off much from that level at all. But let's go and put our normal indicators on. And for those who always follow me, you're probably well aware that we use the 30 exponential moving average and also the 15. Nothing magic about these numbers. It's just what I consistently use. And of course, it means I'm looking at the same information week in, week out. And that's what it's all about when you're using indicators, is using the same ones consistently, using whatever term you're doing your research over and just being consistent with that, because that's how you end up getting consistent results. So looking at this on the weekly, you can see that the market is still trading above both of those, which is a good sign. Also, that 15-week moving average is above the 30-week moving average. Again, that is a good sign. On this 1 week chart, the only thing, and I did mention this last week, is if I look down here, the RSI, the relative strength indicator, you can see that it is currently sitting at around 63, but it's clearly pointing downwards. So that is something that I did mention last week. Could be a little bit of a warning sign, but hey, only time will tell. And that's why I'm a little bit cautious here. The fact that we have sold off last week, there wasn't heaps of volume with that sell-off. I mean, there was a little bit, but it's certainly not as much volume as what there was in trading the week before. So last week with that sell-off, there was about $140 million worth of shares traded, whereas the previous week was a little bit higher at 167. So we definitely want to see those green candles having more volume than the red candles. We'll just pop it onto a 1 year chart, simply because that gives us the daily, how the share's moving in the daily. And you can see, looking at this today, that so far, so the market is still open. It's got roughly an hour and a half to go until close on Monday. And the market so far has fallen just below that 15-day moving average. So that's something to keep in mind, okay? And potentially, so if we look, we've had a good strong run last week, but for some reason it was Friday. We had quite a sell-off, and you can see that by that one red candle. Again, going down and looking at that RSI, look at that. That is really selling off quite heavily on the daily chart. So that is something to keep in mind, just to see what's happening. For me, I haven't looked at entering into any new positions for this week, and that's the reason, is because we have started to see that little bit of a sell-off, just a little bit hesitant there, just keeping an eye on what these indicators are telling me. And there's nothing wrong with actually not making any investment decisions, in other words, not buying, just because you're a share trader or share investor. sometimes making no decision and deciding to stay out of the market is actually making a decision. So just because you see yourself as wanting to invest or trade into shares doesn't mean that you need to be doing something every single day. So that's something just to remember and keep in the back of your mind. And making a decision by not to enter is still a good one. I did see last week on a personal note when I was going through and reviewing a number of my own positions, many of them had reached new time highs or had increased in value rather. So I was able to increase my stop losses, and that was really encouraging. That's really good to see. So whether it's only a few shares that are causing this little bit of sell-off from Friday and today, who knows? Only time will tell. But if you're holding positions in the market, great, keep holding them, and definitely recommend having those stop losses in place, because that is where you already know comfortably where you're prepared to exit the market. And I've said this before, it takes out all of the emotion. It means that you don't have to decide, gosh, is this going to recover? It could get better. All of these sorts of things. It's a good share is another one I hear a lot of. By predetermining where you're going to have your stop losses in place, automatically takes that emotion out when that share does hit that selling figure. Doesn't matter what you're doing, if you've got it loaded, it will automatically take you out of the market. And for me personally, I really like that. And to be fair, it stops me suddenly second guessing myself and thinking, gosh, should I be entering into this, or should I hold it a bit longer and see what happens? It's completely binary, and I really like that. I'll stop sharing. So I really hope that's helped. This week, we are going to take a look at Turner's Automotive for the stock and review. And I've said it before too, I'm looking at putting together a very, very basic elementary 1-hour course on learning to invest. It is very, very basic, but I love to help you out and get you started on that. So I'm looking at probably doing it after hours, is where most people have said would potentially suit them. So I'm thinking probably maybe around 7:30, hopefully children are in bed, you've had your dinner, that sort of thing. And probably on a Thursday night is what I'm looking. And I'll probably look at doing something like that in early November. So let me know, keen to get your feedback, and obviously want to get as many people involved that are interested and try to suit a day and timeline that is going to be best for the majority. So anyway, leave it there until Thursday. Take care.